Hi, this is Randy Finney with the Right Side of the Chart, and today is Tuesday, November 19th, 2013. And in this video, I wanted to do an overview of the social media stocks. We're looking at a chart of SOCL here. This is the Global X Social Media ETF. And on the left here, I have a watch list that I created. This includes most, not all of the top 10 holdings in social. Some of those top 10 holdings actually don't trade on the U.S. Markets. And so what I've done here is compiled a list of the top 10 that do trade on the U.S. markets, as well as a couple others in there. And wanted to take a quick look at that. You can reference the post made back on October 24th. I talked a little bit about social. Real quickly, I pointed out these double negative divergences. We had the MACD and the RSI diverging at this point, as well as even steeper divergences at the high, and that ETF has come in quite a bit lately. I've also mentioned the near parabolic run, the very, very large volume surge, which is indicative of a buying climax. And again, you can reference that post using the post by ticker symbol drop down box on the right hand side of the homepage. Another case that I made in shorting these stocks is evaluations. These are just insane valuations, unsustainable. You look at LinkedIn with a PE ratio of nearly 800. Most of these stocks have PE ratios, above 100 or near 100, and the remainder don't even have any earnings at all. So if you don't have an E to compute that part of the PE ratio, then you have a negative or no PE ratio at all. In other words, these companies are not profitable. They're not even making money. So, yes, I know some point in the future, I'm sure some of those companies, such as Twitter, will be around and will be profitable. But at this point in time, I do believe there's quite likely a bubble that, in my opinion, probably not even forming anymore. We're probably in the early stages of that bubble popping, at least for a pretty significant correction. So let's go ahead and just dig into the individual charts. We'll start out with LinkedIn here. LinkedIn is an actual short on the site. We shorted LinkedIn on a breakdown here of this uptrend line, or this, you could call it almost a rising wedge pattern. The first target was hit. I just updated the chart on LinkedIn today, this morning on the site. And so we hit the first target already. Prices bounced from that range, made a near back test of the pattern yesterday, as you can see here, and have since reversed. At this point in time, I don't have a preferred target. I should say I'm looking at least T3. Excuse me, a little bit under the weather here today. T3, looking at a very likely target. Let's move this out of the way for now. And as you can see there, we have a thin zone. So if and when prices get down to T3, I would expect some type of reaction. Maybe a lasting bounce going on for a few days, a couple weeks. Again, we'll have to wait and see once the charts get there. It's hard to look this far ahead. In other words, maybe at that point there's some positive divergence on the 15 or 60-minute charts and some other signs, such as the market being at support, and that might cause me to cover. And if not, if the trade still looks good at that time, and I think there's a good chance that the T3 level will be broken shortly, then once prices do break below there, we have a thin zone here represented by these, or the lack of volume at price histogram bars over here on the left. And I would expect a rather quick move down here to the final target, T4 at 127.20. So that's LinkedIn. SINA. What we have here, this chart looks a little bit busy, but let's focus in here. From this move up to here, this pretty sharp move, really from this leg up, since then the stock has formed a broadening top pattern. Now, I'll move these trend lines out of the way. Let's just look at these real quickly. I do have this uptrend line starting here at the, let's try to get the crosshairs on it. That's the June 24th low, and we had several reactions here. Prices broke down below there. It looked like they crawled up back testing, made a slight one-day pierce above that trend line, fell back below, came back and kissed it right there at this point for a high level, not even a high level, just a regular back test, I should say. It was a very steep line to begin with, and since then moved down sharply. So this was a breakdown of that trend line, and let's go ahead and get this out of the way so we could just now focus on this broadening top pattern. Any breakdown of that broadening top pattern would be a bearish event. I have this other possible uptrend line drawn here off the, looks like about the April 22nd lows, couple reactions here, this most recent reaction. So this is also another level to watch for those who might be interested in jumping the gun, getting an early short entry on this, being the fact that we are so close to that uptrend line, as well as within the broadening top pattern. You may want to hold off and wait for a breakdown below there. I don't have an official price target, or a price target, I should say, and I haven't added this as an official trade idea. I just wanted to point the chart out that it is looking pretty bearish here. Facebook, this is an active short on the site and has been. We're actually using the 4-hour chart. The entry on this one was based off this 4-hour chart. Negative divergences built all the way up to this most recent high. We hit the first target all the way back here well, that was early October, if I'm not mistaken. I believe that's when that first target was hit, and hit it again here. Prices have now moved down below, but we really have support. If you look at those earlier reaction lows right there back in early October, we have some more recent reaction lows. So if I put a horizontal line here, which I'll go ahead and do, anybody looking to jump on board Facebook on the short side, we also have this reaction high here. So this support line, I'll try to add an updated static chart. In fact, I may have a live link on Facebook. If you check the post on that, there may be a live link over to stock charts, and I'll add the line there. So a break below that level would open the door for a move down to T2, which is the next target. After we break down below T2, T3, and at this point in time, that is my final target. That may be extended. If you look at the Fibonacci, these are Fibonacci retracements, and that goes from the low down here all the way back in, looks like June 6th, around there, up to the recent highs. So my second target lines up almost perfectly with a 38.2 Fibonacci retracement. My third target lines up very well with the 50% Fibonacci retracement. And keep in mind, these targets I had in place at this point when we entered the short trade, not on that marginal new high the stock made. So coincidentally or not, I find that interesting, and but not surprising that these fibs line up nicely with these horizontal support levels. And we looked at the daily chart when I came in here. So this, for those of you who like to trade off the daily time frames, as you can see here, we have a nice thin zone here. Once this T1 level goes, as I talked about, use that 4-hour, maybe a 60-minute chart to zoom in a little bit. And once we get a break below this level, a solid break, we have very little trading that occurred here. So I expect a relatively quick move down to the T2 level there on the daily chart. Okay, P, this is Pandora, and yes, Pandora's a music online radio station. Great service. I use Pandora. I know a lot of people do. Either way, we're looking at a nice ascending channel here with clear divergences in place. If you look down here at the MACD and the RSI, we can see some clear negative divergences in the top, put in at the recent highs, I should say. As really drawn by this line here from this peak to this peak. And what we're looking at here, I think at the very least we'll see a move back down to revisit the bottom of this channel sometime soon here in the coming weeks. And if and when that channel gives way, we have a very nice gap here that I've defined by these two horizontal lines. So the bottom of the channel, for those of you that want to go ahead and enter short now, I think it looks pretty good. You could cover here at the first target, or have this as your first target, where you may want to book partial or full profits depending on your trading style. And if and when that channel breaks, I would expect to find, being the way I would see this play out, let's draw this out here. let's see if I can add an arrow to that. I would expect to move down there. If we see it happen relatively quickly like this, I'll move something along these lines, and then we do get a breakdown. I would then favor the bottom of that gap if this channel were to break down. But again, you want to watch the top of the gap. We have several reactions off that level, so that may or may not come into a support. So we'll just have to take this one as it goes. But right now, let's just first things first. Let's see if we can get a move down to the bottom of this channel on Pandora. Next one up is Zynga. Now, Zynga I added as a long trade just the other day, and I personally took this on the intraday breakout. I mentioned that some traders might want to wait and see a 60-minute or even a daily candlestick close above this pattern. I was a bit suspicious, and obviously one reason being I'm very bearish on the entire social media sector. Zynga is a gaming company, for those of you who are familiar with it, but they also do a lot of social gaming type stuff where you get online. I don't use Zynga, but I'm familiar with them and seen the name. So big company, once again, very overvalued company with a P ratio of nearly 100. And either way, I was only targeting T1, so I was taken out yesterday, stopped out of that trade, and I left it on because we're a little bit above the secondary stop. I gave two suggested stop levels, one for those targeting T1 and one for those targeting T2, and we closed we closed just above the lower stop level. So if and when that stop is taken out, as it probably will be, this false breakout was a pretty bearish technical event. We had some very nice volume on the initial breakout intraday, and then the stock just wasn't able to close above that level, and so we had a nice down day yesterday. So enough on Zynga. It still could pop. So for those of you who are bullish on the sector or the stock, that is a nice basing pattern. And if we do get a solid move or a close above that level, I think it was oh gosh, I'm trying to remember now, 408, something like that. You'll want to see it take out yesterday's highs, of course, or I should say Monday's highs, the Friday's highs. I'm sorry, Friday's highs. This is Yelp, and what we're looking at on Yelp, I have a couple trend lines drawn here. This is one trend line which over time, and maybe over time might only be a few weeks, a couple months, we'll probably come back to test this line. We've gotten away from it quite a bit. Again, a lot of these social media stocks and this frenzy and this bubble, you can see the volume down here, the buying coming into a lot of these social media stocks lately compared to what it was over the last few years. A lot of frenzy. People don't want to miss the next great thing, and that's what they believe to be social media stocks. So either way, this is a trend line I think we'll come back and see. Now, if we look at this uptrend line, this orange uptrend line, as well as this upper bound, this is a rising wedge pattern. And we have, I didn't draw it in here, but we could draw divergence down on the RSI, negative divergence at that point where prices made a higher high. And so this was a very clean breakdown. If you disregard these white lines for now, we just had a break right here, an impulsive breakdown below the rising wedge pattern, and prices came back to make a perfect back test of it and have since moved down. Now I've added these white lines because this represents, there is a very nice support level here. If you look at that bottom lower line, this is a descending triangle pattern. Descending triangle patterns are inherently bearish. They can break to the upside. If they do, that would be a bullish event, so you want to watch out. And if you want to take the stock now in anticipation of a downside breakout, you may want to have your stops. Tight stop would be on the above the top of this pattern, just above the top of the descending triangle pattern, or my preference would be a stop above the highs here, the most recent high around 75, call it 75.60, somewhere in there. And of course, a trader could wait for a confirmed downside break of this pattern. This would be my first price target here. I have a nice horizontal resistance. I've excluded these spikes. You look at the volume of price histogram, and there's just a huge gap sitting below there. So I would expect the first target to be this line, and the second target to be either that uptrend line that I showed, or let me clarify. Let me just draw the bottom. Here's the bottom of the gap. So we have the bottom of the gap or this uptrend line. So this, draw it out, it would look something like this. move down. If we get a breakdown, probably find our initial support or reaction right here, a little bounce, and then maybe a move down to that area there. And that is Yelp. Groupon, this is just a nice clear uptrend line here with 1, almost 2, there's 3, 4 touches, a breakdown, a near back test. We have horizontal support drawn here. So if I'm not crazy about this one, and I won't add this on as an active or a trade idea, an official trade idea, but one could certainly short Groupon on a break below this horizontal level here. It's around the $9 area. Yeah, about the $9 area. And if that were to occur, have some support here around 770-ish, and then finally I think this would be the ultimate downside target here. That is, let's see, that level is about 770-ish, and that's Groupon. Yandex, YNDX, looks like a rising wedge pattern. Divergences in place. We have flatline divergence here. The MACD was making pretty much equal highs, just slightly lower. This line slightly downsloping. The RSI is downsloping against a higher high in prices if we look at the upper line here. And we had a nice breakdown, very impulsive move. You can see on that red candlestick there, and nothing but a back test so far. So Yandex, although not my favorite, I don't have price targets marked on this chart. That would be one there around the $34.25 area. Another one around $31 would be the second target. So one could enter a short here and use a stop above those recent highs, just above $42 if they were so inclined. Google isn't a pure social media play, but they do have their Google Plus or whatever it is. There's some social media function. I know I have Google accounts and I don't use it, but I see I'm solicited all the time for their version of Facebook. I forget what it's called. And of course, they do have their hands in a lot of different things. So nonetheless, it's part of that SOCL, the social ETF. And I talked a lot about Google in the past, these Fibonacci fan lines, how they've acted as support resistance for months now, or pretty much throughout the entire year, 2013. And the last time we hit it right here, we had a nice bounce off that very lower bottom fib, the purple line, fan line. Google moved up and then had a huge gap up, and coincidentally or not, we found resistance here at this level here, this fan line, and there's Google. I have no opinion on the stock. I'm not bullish or bearish. I'm not advising to do anything on that one. Chart's just not clear to me. And Twitter, well, there's nothing to talk about Twitter. We don't have enough trading history. But you can look here. The market is about to open. And in this column, you can see how these stocks all took it on the chin yesterday. And in large part, that's, I'm sure, played into the reason the NASDAQ was down so much. I think the NASDAQ was down nearly 1%, while some of the other broad markets were close to flat. And I know Facebook is a pretty big component now, the NDX or the NASDAQ 100, and Facebook was down 6.5%. So again, right now I have officially, and I've had these on the site, we have LinkedIn, Facebook as a short, and Zynga, I'll leave that on as a long now, even though I'm out of the stock. And if it takes out that other stop today, it'll be removed from the long trade ideas. But okay, folks, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed.